What's up, everyone? It's Caddy with Money Investing. Looks like the reality is now finally starting to set in with the markets, with the S&P 500 down 2%, the Dow Jones also down over 2%, and the Nasdaq getting destroyed after such a long time. We are seeing a 2.5% red day for the Nasdaq. A lot of tech stocks, a lot of growth stocks were down 3, 4, 5, 6, 7%, you name it. So there was a lot of selling pressure here intraday. And this should really not come as a surprise to anybody watching our videos, watching the channel here at Money Investing, because we've been talking about overextended levels, we've been talking about overbought conditions, we've been talking about valuations for some weeks now. And we are finally starting to see the markets roll back a little bit on the back of the counter trend rally that we saw from the 10-year yields, the dollar index, and most importantly, the volatility. We've been talking about those three indicators in our previous videos. And what's interesting is the 10-year yields got tapped out at 3.9.5%. So we're almost getting back up to 4%, which should be a clear indication in itself that tech and growth is going to struggle. It is going to find a wall and a resistance level where it's not going to be able to break out of anymore because of how high the 10-year yields are going. So hope you guys enjoyed this video and find it helpful. I'm going to break down everything there is to know about the markets right now. We are seeing a lot of selling pressure, no doubt. Almost all sectors, all 11 S&P 500 sectors were red on the day. But as always, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And don't forget to join our Discord and our Patreon if you want to get access to our private videos and our alerts. I alerted everybody on the options trades, which are acting as a quote hedge on this potential downside. And just today, our Tesla covered call profited really well, up over $922 or over $1,800 in total. And this covered call is up over 40% for me right now. Another 40%, so just needs to, Tesla just needs to drop a little bit more, maybe down to 190s or 180s, and this call will be up over 75, 80, almost as much as 90%, at which point I will be looking to close this hedge. This right here is on Advanced Micro Devices. So you can see that we're already up close to 76% on this covered call. So I will be closing this one out tomorrow or later this week. If AMD drops another few percentage points, then that would be fantastic. But my threshold really is around 75 to 80%. I'm going to take that profit tomorrow or later this week. So again, if you want to get access to these options alerts, swing trading ideas, trade alerts, and not to mention the private videos and a lot of other benefits in our Discord, the link's going to be down below. There is a 16% discount that is available for a limited time till the end of this month. So you can take advantage of that while it's still here with the limited spots that are available. So Dow closes nearly 700 points lower in a broad sell-off as all indexes cap their worst day of 2023. U.S. stocks dropped Tuesday as higher rates continue to pressure the market sentiment, and the latest batch of retail earnings released concerns about the state of the consumer. And the Dow Jones dropped almost 700 points. We got the S&P sliding 2%, and the Nasdaq fell 2.5%. And all sectors ended lower, with consumer discretionary stocks seeing the largest decline of 3.3%, and the tech-heavy Nasdaq composite pulled back 2.5%, ending at 11,492. So a little bit under 11,500, a target which we talked about in our previous videos. So Art Hogan said, and he's a chief market strategist at B. Riley's Wealth, I think it's the equity markets that finally caught up to what the treasury markets have been saying for a couple of weeks. We have had a string of better than expected economic data. With every new data point, we saw a tick up in yields in the treasury market. And that's really the bottom line, right? If you kind of go back to last week, and not even last week, the week before that, if you go back, the markets were red, right? Nasdaq was down 2%, S&P was down. So what we really saw was 5 consistent weeks of green, and then the economic data started coming out, and we basically saw, not very promising reports. Like, they were good, and let's just put it another way. They were not terrible. They were not bad, but they were not super promising to a point where the markets should be celebrating or rallying on that news. CPI, PPI, retail sales, GDP, right? Unemployment, right? If you put together all those things, they only pointed to one thing and one thing only, and that is the Federal Reserve has more room to hike rates. Economy is still strong, unemployment is still low, labor market's tight, and we've got inflation still high. What does that tell you? That tells you the Federal Reserve has the ability, not saying that they will, but they have the ability and the flexibility to raise rates more than what we expected, right? What we anticipated from the Federal Reserve. So that, I think, the market is now finally starting to catch up to the fact that the Federal Reserve is not playing any games. They mean business when they are looking to fight inflation. But man, oh man, this right here was a state of the market with the Tesla down 5%, Amazon down 2.6, Google here 2.69, Microsoft was down, Apple was down. Entire communication services with Meta kind of holding up a little bit better. They were green, so they were up over 2%, but only down about 0.5%. And PayPal was green. Somehow it ended up green, up over 78 basis points. But the entire financial sector here, we got healthcare, we got industrial, real estate, energy was very much back and forth, but still on an overall basis, aggregate basis, still down. And consumer defenses and energy were two sectors that kind of held up a little bit better. Those are very consumer defenses and risk off sectors to begin with, but everything else is straight up down here. Brutal sell off here. Market's absolutely getting hammered. So consumer defenses were the least. They were like not. They were the best performing sector. In other words, they were the one that outperformed every other thing. Followed by energy, and then of course consumer cyclicals and technology and comm services, the worst performing sectors, really underperforming the overall market and other sectors as well. Over the last 1 week, what we have really seen is pretty much underperformance from all sectors. Every single sector in the S&P 500, all 11 of them are down. And over the last 1 month, we're now starting to get a little bit of a distorted picture where energy is down 5% and technology is still up over 3.7%, but it's not going to take long to flip the script. Now, moving forward, we got natural gas and lean hog and coffee prices pushing higher, with sugar also up, and platinum, orange juice, and crude oil selling off. Bitcoin's a little bit over 24,200, Ethereum back under $1,700 right now. And this right here is going to be the meeting probabilities and what the markets are anticipating from the federal funds futures. And right now there is a 76% probability for us to see a 25 basis point hike, and then a 24% probability for, wait a minute, actually, you know what? Where are we sitting right now? I'm actually curious. Are we at 4.25 to 4.5%? Isn't that where we are? Because if that's the case, then this is completely flipped. Let me just go over that very quickly. I'm just gonna take a look, because it does seem off a little bit. If we are at 4.25 and 4.5%, which I think we are, I think we are at that price. So okay, current rate is going to be, okay, so current target range is 4.5 to 4.75%. Okay, just scratch that. 25 basis points expected from the members in March, and then 24% for a 50 basis point probability. But in other words, by May, there is a full expectations that the rates are going to be sitting at 5 to 5.25%. And that's exactly what the Federal Reserve has also told us in their SEP. And then by June, investors are expecting, especially from the Fed funds futures, that rates are going to be sitting at 5.25 to 5.5%, which our terminal rate at over 5.5% is certainly going to be, worth talking about, because that's obviously going to be a lot higher than where we are right now. It's going to be a lot higher than where the SEP has pretty much projected rates to go, and that could really start to stir things up in the economy, especially. Now, talking about a little bit of the markets, no bids. No buyers in sight, and the bears definitely having a day in the sun today, with from the get-go the markets here selling off. So the Nasdaq intraday pretty much sold off over 1.64%, but of course on the day down 2.5%. And same thing with the S&P, same thing with the Dow. These are 30-minute candles, so absolutely only 1 hour worth of buying in a 6-hour day. So we only had around 12:30 p.m. around lunch, when the volume drops down, liquidity dries up a little bit, and then right before the close we had one last shot at a potential reversal, but the bears once again came back in to bring us down to pretty much close at the low of day. Oil prices here once again rolling over, so it's been a very textbook pattern where it's just trading sideways, consolidating in that range. $81 per barrel is that resistance, $73, $74 per barrel is that support, and right now we're seeing a lot of consolidation sideways with oil pretty much flat. Bitcoin here getting a bit of a rejection at 25,000, as we pointed out during our live stream. This is a big resistance for BTC, and right now we are seeing a little bit of a pullback from those levels, and Ethereum also getting rejected inside this red rectangle at around 1,700, and we're seeing a little bit of a pullback for Ethereum as well. Volatility is on the move. It's up over 7.7%. So getting past 22, almost 23 levels. In fact, on the day, it was trading as much as 23.3, and then pulled back a little bit under 23. But next target really is going to be around here. This is going to be the next level to watch, around 23, 24 levels, all the way up to 25 and a half. And of course, right now we're seeing a very nice, move back up for the VIX. And if it continues to push up, obviously that's not going to be great for the markets. Now, the big topic of discussion today is going to be the 10-year yields. Been alarming you guys about this for a long time, and you'll notice the 10-year yields have been on the move, and this is the counter trend rally, which, theoretically on a correlation basis should really put pressure on U.S. equities, which it finally now is, because we kind of draw that conclusion from the previous rallies for the 10-year yields and how that's really resulted in the markets to sell off. And this time around, again, we had the 10-year yields pushing higher, we had the dollar index pushing higher, and yet nothing from the market because the sentiment was so strong. But I think it's finally starting to play out as it's supposed to, in my personal opinion. And the 10-year yields are, getting up to almost 4%. They were at 3.96% just today. They were about 4.04% away from 4%. Absolutely crazy how high we've pushed up in a fairly quick amount of time. So from 3.36, the 10-year yields have rallied about 17, 18% already since the beginning of February. Not January, not December, not October, since the beginning of February. So definitely a lot of momentum there. Now, talking about the S&P 500, we are at under 4,000 now, something that we were eyeing for a long time. It is going to be a very, very interesting pattern moving forward because we are now coming down to test our higher low. So this right here is that ascending support or that higher low. And right now we are coming down to that confluence of that support. So from that previous resistance, and not to mention that higher low that we just mentioned for the S&P. So that is going to be a potential support for the S&P. So we'll keep a close eye, but we'll also monitor the possibility of a potential breakdown below this level. And that can result in some continued selling pressure for the S&P 500. But a really brutal day today, coming down to that support 4,000 as we talked about, and right now we're sitting at that confluence of that support. So what happens tomorrow, later this week, next week is going to be very critical for the technicals of the S&P 500. Talking about the NASDAQ, and NASDAQ here once again coming down to that support. So this right here is the exact level that we identified at 11,476, and we came down to 11,492. So once again, we're coming down to that potential support. And again, both the S&P and the NASDAQ are now at a support, right? At least an intermediate support. They're not like at a very strong level of support, but they are coming down to a level which can be considered as support and reasonable demand present at that level. The power just went out, but bottom line is that we got to be very careful. This can be a potential dip buying opportunity, but we can't take away from the fact that this reality that we're seeing from the markets, in other words, the CPI, the PPI, the yields, the interest rate expectations, and of course the Federal Reserve, a lot of this can continue to get priced in. And if we do see an environment where recession happens or there's stagflation, then in my opinion there's a lot more for the markets to come down to, considering the valuations and fundamentally speaking, the aggregate valuations still a little bit on the high end. So we got to be careful, and I don't mind dollar cost averaging, let's say in smaller quantities, but we have to be extremely cautious, fully knowing that these support levels can break down even further, and we can see some more downside for the market, especially tech and growth. Now, talking about Apple here, and Apple on the day pulling back quite a bit and breaking down below 152. And again, RSI coming down. This is the first crossover for the MACD below the signal line since November. And we saw some significant sell-off here. We had a very strong rally here, and we're now finally starting to see a little bit of a bearish crossover for the MACD below the signal line. This first histogram is also forming on the day today, something definitely worth talking about. And we're starting to see the technicals and of course the price itself pull back here and really show us signs of more potential downside. Amazon here also selling off, and support level is going to stay put at 91.47, 91.50. So this right here is going to be that level to watch, and resistance next is close to $104, $105 per share. So that right there are going to be some levels to watch for Amazon. But of course, RSI MACD has already been selling off. It's been coming off of its highs So it's not a surprise that we're seeing more downside for Amazon, but next support really is going to be $90 to $91 for this company. Talking a little bit about Tesla, and Tesla here down a little bit over 5.25%. So, we talked about the negative divergence. We talked about the RSI. Like, this is so close. I mean, take a look at that histogram. Literally 0.18 is the value. So it is literally zero to some extent. And if it turns negative, then that means the MACD line is going to be below that signal line, which once again is going to be a potential bearish signal. But take a look at this rally. I mean, since the beginning of January, we've seen nothing but a massive rally for Tesla. So a reasonable pullback is not unlikely, not something out of the question, and something that we can, potentially see from Tesla stock. So if it does happen, next support really have got at 165, 166. So this right here is going to be that level to watch. And right now we still have a resistance sitting for us at 228. So this right here is going to be that level, and maybe even this right here as a resistance, a potential resistance in $200. Low 200s is going to be that level also. Talking about Nvidia here on the day, Nvidia here also falling 3.43%, something that we already talked about. RSI MACD continuing on that potential downside. This is the second day the MACD is crossing below that signal line, and the histogram's expanding, meaning that sell-off is accelerating a little bit from a momentum standpoint. And of course, we're seeing the price also roll over. So 190 really is going to be that next support level to watch for Nvidia. So that right there is going to be that level to watch. And of course, resistance staying put at 230. We've gotten rejected there not once, but twice now for Nvidia. Advanced Micro Devices back below my call strike of $79. I didn't think that this was going to happen, but a little bit more of a pullback on AMD, and I'm good. I can pretty much close out that covered call and profit over 75 to 80%. So again, if you want to get access to all these options alerts, we don't really take a lot of options trades, like not me personally. I know a lot of people in our Discord, a lot of members do, and they kill it in the options market. But for me personally, I take a very conservative approach. I trade them maybe once a month on multiple different stocks, and expirations are 30 days out, and I'm able to profit off of the sell-off that we see, or even the rally, depending on which strategy we're using. But the success rate is much high, and the risk factor is relatively low when you're considering options trading strategies in general. So give it a try. If you have any questions, I'm always happy to answer and always available to help you out. But next support for AMD is going to be $71, $72. So this right here is going to be that level to watch, and resistance stays put at 78, close to $79. And yeah, super excited for this AMD pullback. And if it continues, that's going to be even better for the calls that we've sold. Talking about PayPal, and PayPal actually held up really well. Surprisingly, it was up 78 basis points. Lots of buyers stepping in. So we did get a bit of a breakdown here below $75 for PayPal, right? So this right here was that previous support. We got that breakdown from PayPal here. We sold off, and right now we're seeing a lot of buyers stepping in. For some reason, volume was decent. We still have a gap to fill over here. So for PayPal, $75, $76 is going to be a resistance now moving forward. And of course, support level all the way down to $67, $68 per share for PayPal. And there's another potential, positive signal that is, I think PayPal's CEO, unusual $2 million stock purchase is certainly a positive signal. So that came out 3 hours ago. That may have something to do with the positive sentiment that we're seeing today. And I think the average price for PayPal CEO after buying for these shares was closer to $70 per share. So I'm not exactly sure, but Schulman's February 17th purchase of just over 26,000 shares is slowed in a filing. The SEC the same day serves to drive home the idea that management believes it can execute its plan to expand earnings meaningfully this year despite modest top-line growth. And Schulman bought about $1 million worth of PayPal stock in February 2022 after the company posted a disappointing earnings report. Seems like February is usually the time when Dale Schulman goes shopping of his own stock, but that definitely serving as a bit of a positive catalyst for the stock on the day. Square, accelerating that downside even more. Not a surprise, down another 4% here, so under $72. And this right here is going to be deleted, and the next support really is going to be at $59 per share. I think the valuation is still a little too much for Block, but they are reporting earnings later this week. I believe on Thursday, might be even on Friday. I'm not fully sure, but I think it's on Thursday. But they are, so Thursday, February 23rd is when they're reporting earnings, so we'll break that down. But the next support really is going to be $59. I think the valuation is a little too high for this company still. Talking about Meta Platforms, just kind of held up a lot better. It was green, so it was up 2% after Meta rolled out their Meta Verified feature for Instagram and Facebook in New Zealand and Australia. We talked about it over the weekend. I did a complete video on the new social media era. So you can check that out if you want to. But the next resistance really is going to be $183, and we've got a big gap to fill on the downside over here. We have been slowly and steadily kind of filling this gap. This gap was actually all the way up till here, but we have seen Meta kind of fill this gap, to some degree. But of course, we still have a lot more potential gap left, and on the upside as well. We've got this massive gap in the 290s for Meta to eventually fill in as well. But 183 resistance, support level is going to stay put at 153 with the huge gap on the downside yet to be filled. Talking about Netflix here on the day, it was down another 3%, coming down to 337. As we have mentioned before, Netflix's valuation is also a little too high. My fair value is in the low 200s, but Netflix's support right now on a technical basis is going to stay put at 332. So this right here is going to be that level to watch, and resistance is going to stay put at 369. So this right here is going to also be that level to pay attention to for Netflix moving forward. So this right here, lots of consolidation, but really that support is going to be at 332. We're seeing the RSI and the MACD also roll over for Netflix. Talking about Google here, and Google on the day down another 2.6%, so really struggling and selling off quite a bit. So next support really is going to be all the way down to $86. We're actually going to end this trade idea. This is an entire trade idea for all the members, which is now over, but support level next is going to be $86, and we can once again reanalyze this company. We can once again start to kind of formulate a trade idea and a potential setup that might benefit us on the long side for Google. Talking about Microsoft, and Microsoft on the day was down another 2%, so really seeing a lot of selling pressure. RSI, MACD accelerating on the downside here. Next support is going to be 247. So this right here is going to be that level to watch for Microsoft, and my fair value obviously in the low 200s for this company still. And last but not least, we got Shopify, and Shopify on the day down 5%, rightly so, because of the fact that their earnings were terrible in my opinion, and support level is going to stay put at 41.45. So we're literally at that level, and of course the RSI MACD has been selling off. So if it continues to accelerate on the downside, which I don't doubt that it could, next support really is going to be down in the low 30s once again for Shopify, because just take a look at how quickly these stocks have rallied since October. Shopify has gone up 130%. That's unusual, right? Given the circumstances. Since December, stocks rallied 70%. On what? On what? You ask yourself, on what? You're not going to come up with a lot of answers, but instead it's mostly sentimental driven. It's mostly a lot of euphoria driving these prices higher, and could also be a part of the short squeeze, which kind of added on to the overall sentiment. But support level really is going to be back in the low 30s for Shopify once again. So I hope you guys enjoyed this video and a complete update on the markets. And the bottom line is that, look, we've been talking about this for a long time, that valuations just starting to make little to no sense right now. We've seen a lot of sentimental rallies in the markets, a lot of euphoria driving this greed in the markets, where every single dip, every single red day was getting bought up. But I think eventually the reality will set in, and that is to say that inflation's a little too high still, and it's now starting to kind of stagnate. We don't know if it's going to continue, but we are kind of stagnating a little bit, and it really comes down to what the Federal Reserve ends up doing with interest rates, and do they believe that that inflation has come down enough, not enough, or we're nowhere near close. They have to make the call, and they're obviously going to be the ones driving interest rates, which in return is going to be driving the equity markets. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel and join our Discord, and join our Patreon if you want to get access to all the benefits and alerts. And we've got an amazing community talking about fundamental analysis, technical analysis, and macroeconomics, as well as options. So you will never be hungry of these different types of disciplines, because we do cover it all. As always, happy investing. I'll see you all in the next video.